What is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to be sharing with you all a private Zoom call recording with the CYPRX community, breaking down one of our phenomenal trades from our pre-planned analysis sent in the private CYPRX community. Now, make sure that you all are taking notes. We're going to be breaking down fundamentals, breaking down technical analysis. Throughout the entirety of the week, I give my pre-planned analysis to the CYPRX community in advance. In today's video breakdown, I'm going to show you a kind of in-depth perspective from inside our CYPRX private community. Remember, you guys have access to our private community in two different ways: by joining our lifetime membership, where you get access to our over 80 hours of in-depth course material, or you can take a more month-to-month approach where you have access to our private CYPRX Discord via our monthly subscription service. Lots of valuable information, lots of knowledge shared in the group chat, pre-planned analysis, delta zones, crypto research. We also have educational PDFs, daily fundamental analysis, and daily technical analysis given to the community in advance. So if you guys are interested in that, visit CYPRXtrading.com. We'd love to have motivated individuals on the team. With that being said, sit back, relax, enjoy this video breakdown, take some notes, right? Especially if you're learning to trade, whether it be crypto or in the forex space. Make sure that you are paying attention to what it is that we say in this video breakdown. With that being said, smash that thumbs up button and subscribe. Let's jump in. Alrighty, what's going on, everybody? Welcome back to the 6th episode of CYPRX Tracking. Hopefully, throughout the entirety of this week, you guys have seen the potential that I have to bring to you all in the form of accurate callouts, price analysis, and fundamental breakdowns. So almost every single trade idea to the absolute T of a degree that we called out this week for you all in the El Chapo analysis section had been met. We covered in yesterday's video breakdown the dollar cost average positions on crypto, so we won't beat a dead horse and go over that. All of those positions on digital assets that we called out in the form of dollar cost average positions are in profit. We're going to focus our attention on GBP USD and the callouts that we gave. So the first trade idea was this one here, 1 and 2. Both of those targets had been met at the first half of the week. And then following into the later half of the week, Thursday into today, Friday, we had these call outs where I adjusted my analysis for you guys. Now, the first trade idea was sent because during this Asia session, we had a slight pullback and a continuation move above the 1.26800 for price to come up into the 1.27. You guys can see that here. Then today, I mentioned to you guys, if we scroll down to the analysis section, albeit I gave you guys a full breakdown of that trade. Now you guys can see right here, I updated you last night here in California, roughly 2:24 a.m. You guys know I never sleep. I'm always trying to give you guys updates. And I said, the second trade idea is now in focus, excuse me, given the recent pullback in GU, okay? So I updated you guys, mentioned to you all that this is now the focus of the trade. And that entry for this second trade was, as long as price can hold above the 1.26100, we will be looking for buying opportunities. So in previous tracking session video breakdown recordings, I mentioned to you guys that we are only going to be looking for sells. And this is exactly why I told you guys this, and I explained this to you all yesterday, okay? We're only going to be looking for sells if dollar strength persists and we see GBP USD break below the 1.26100. That had to be one of the catalysts, okay? And we did not get that. What we did get today is a massive dump, manipulative move. Again, remember how I showed you guys in yesterday's video breakdown, the news has been a manipulative means of driving price down into discount so the banking institutions can buy it up at a lower price. The narrative that the Federal Reserve is going to cut interest rates in 2024 is holding the most weight. So every single time we've seen these massive dips in GBP USD, we see a recovery. If we go look at the hourly and above, we know that since pretty much October, when this rate cut narrative came into play, you guys can see here, came into play real strong in the market. We saw this accumulation, breakout of accumulation, retest, and we have been in an uptrend pretty much ever since, following that narrative that the Federal Reserve is going to cut interest rates, which has been driving demand for riskier assets like stock markets and cryptocurrencies and the Great British Pound. Okay. So we're going to continue to play that narrative. The news caught everybody off guard. I even saw some people in the chat saying, oh, I'm going to take sales because dollar's strong today. No, I tried to tell you guys, be patient and wait. The rate cut narrative is still holding the most weight. So what does that mean? Bullish fundamentals, yes, for little tiny intraday scalp positions for sells on pairs that go against the dollar, given dollar strength in the short term, take them. But manage your greed. Make sure you move your stops to break even. Again, not financial advice, protect your capital, okay? Because the narrative that the Federal Reserve is going to cut interest rates has not been completely faded out of the market. And just because we saw some optimistic data today, one optimistic data report, two optimistic data reports are not going to cut the entire or fade out the entire rate cut narrative out of the market. And I told you guys that in previous video breakdowns. What do we need to see? We need to see at least a full month's worth of optimistic data. And then heading into the next month, that data persists optimistic in order for the rate cut narrative to fade out of the market. 1 month worth of data, optimistic for the US economy, is not going to fade out the rate cut narrative completely. Remember that the Fed has stated that they're going to be data dependent. We haven't gotten an announcement from the Fed. We're going to get that at the end of January. So we need to be reactive to that, because right now, I've shown you guys, again, throughout the entirety of all the tracking video breakdowns this week, that the rate cut narrative is holding the most weight, right? So, again, just showing you guys the importance of understanding central bank policy, okay? Here, I even told you guys only safe sells would be back below 1.26100. So I'm always trying to keep you guys in the loop, okay? Now, what did happen? We saw from that key significant psychological level of that price analysis I told you guys to be paying attention to, a bounce from the 1.26100 to the T. Got to give a shout out to Usman as well. You guys know he's always keeping you all updated in the private chat with the delta zones. I'd just like to show you guys. Here you can see. I actually want to show you an example of where he put them out like days in advance, because this is a recording and it's probably going to go on YouTube. Okay, here you can see, let's see what time this date was. This is all the way back January 2nd. Today's the 5th as of time of recording. Okay, you can see the delta zones he gave out in advance, right? And then updated you guys the day after, or a couple hours after January 2nd, the manipulation move or the manipulation zone underneath of the delta zones. And that came in roughly around the psychological level, 1.26100, which is exactly why I told you guys we need to break that in order to see sells. In order to be sellers in this market, we need to break that manipulation region. So be paying attention. Myself and Usman giving you guys this information, if you haven't seen as of now, it is extremely accurate. Like, I don't think another community exists on the internet that is this accurate, that has this level of information. Again, it is up to you to apply the information. We can't sit there and trade for you. We can't sit there and tell you what to do, but we can give you our analysis and our areas of interest and these delta zones, and you guys can take initiative. And I'm telling you all right now, the people that do, wow. Like, it's mind-blowing how accurate it is. Okay, so we had these levels days in advance. Today's the 5th. We had these levels all the way updated from the 2nd, so the beginning of the week. Now let's go over the technical analysis. Okay, so just showing you guys, clarity that you guys have a mentor that knows what he's talking about. I put my analysis on the line for you guys. Okay, you want to have a mentor in the market that's not sitting there giving you guys, oh, buy at tops, oh, sell at bottoms. No, you guys have seen time and time again how I dollar cost average into crypto and how I trade the FX markets. I even put this analysis online publicly on our Instagram just to show people we're not scared here at CYPRX. This game is not hard. Okay, it's not hard. You just have to put in time. You have to put in effort. You have to put in massive amounts of skill, massive amounts of knowledge accumulation, and then have the confidence to apply it. Okay, so given the technical analysis, let's just look at obviously, of course, we already confirmed on the 4-hour and above. Since October, we've been feeding into this rate cut narrative, bullish GBP USD, bullish stock market, bullish cryptocurrency asset class, right? On the hourly, let's again do some session tracking. So if we turn on our session indicators, you guys can see here, banking institutions during New York, aside from the delta information, which we had, but let's just pretend you don't have access to the deltas.
CYPRX 2.0 tracking that I teach you guys in the course material. Okay. You guys can see New York session here, New York session here, both buying from where? The significance of the psychological level 1.2, 6100 that I mentioned to you guys, right? Well, what did the banking institutions do today? Plain and simple. Literally plain and simple to the T. They do not buy at highs. Okay. So what do? They use the news manipulation to drop price down into a discount from where they bought from previous days during previous sessions. And they use that as an opportunity to scoop price up at a discount because these central bankers know what's holding the most weight in the market. And what's holding the most weight in the market, driving strength for riskier assets, is that the Federal Reserve is set to cut interest rates sometime in 2024. So that's the hourly time frame. Okay, you guys could have set yourself some alerts, some alarms. Once price came down into that area of interest, remember I told you guys in previous video breakdowns, I monitor price because I'm a scalper on the hourly and the 15-minute. I don't jump down to the lower time frame or watch price action on the 1 minute because that's how you get manipulated. That's how you make irrational decisions. That's how you make impulse over leveraged trades because you think the trade's going to go in one direction when in reality, if you zoom out, okay, I even saw some people, remember I told you guys I saw some people saying they're going to take sells. Most likely you were watching price action on the lower time frame because yes, on the 1 minute, price action looked bearish as heck, right? We saw this massive sell-off given the news today, the strength in the dollar, right? And then looking back at previous London sessions, someone could assume that price action was bearish. Why? Because on the 1 minute, yes, we are making liquidations of highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And then heading into New York session, we did not break any of these lower highs. So one would assume on the lower time frame, watching the 1 minute price action, that we're bearish. So again, order block traders that don't know how to trade these markets properly, what were they most likely seeing today? They were most likely drawing some type of order block from this area, this massive sell, and they were most likely taking over leveraged sell positions from this area here, once price retraced up, thinking that the market was going to go back down and follow the 1 minute bullish trend, right? They were thinking something like this was going to happen. And wrong. That is not how the markets move. That's why we give you guys these deltas. And that's why we tell you guys to pay attention to central bank policy, why we tell you guys to pay attention to higher time frame. Take all these things into consideration. Okay. So higher time frame, what was the market doing? The market on the higher time frame, if you zoom out now, it looks a lot more bullish. Why? On the 4 hour, we already confirmed, I'm not going to waste time showing you guys, since October, GBP USD has been bullish. So what direction should you be trading? Actually, matter of fact, I'm going to show you. What direction should you be trading given that the higher time frame is bullish? Buys, right? Again, in my personal opinion, if you want to be a high frequency trader and scalp sells, that's on you. But you need to, again, manage your positions, take profit if you're in profit. Why? Because you're understanding that you're trading against the higher time frame. If you can't comprehend that simple freaking logic and you get slammed because you're in a sell position and the market eats your stop loss because it reverses on you, one simple thing you need to comprehend is that you traded against the higher time frame, you swam against the current, you jumped into the river that was going one way and you tried to swim the other way like a knucklehead, right? That's your fault. That's simple. So I told you guys in yesterday's tracking video breakdown, until we break these demand regions on the higher time frame, i.e. the 4 hour, we have to assume that every single time price comes into them, we're going to see a bullish extension. Every single time price comes into them, we're going to see a bullish extension until the narrative changes, until the sentiment that the market's going or the Federal Reserve is going to cut interest rates fades completely. GBP USD and risk assets are going to continue to see bullish impetus every single time price comes into demand zones. Every single time banking institutions or whoever's in control of this market can profit buying up risk assets at a discount, they're going to do so. You understand that, right? Okay. So now that that's out of the way, 4 hour out of the way, hourly out of the way, right? Hourly candlestick body closes did not break any of the previous demand regions from previous New York sessions, which is why I try to tell you guys to track price action. So here you can see this New York session on January 2nd, the days that Usman gave out the demand regions, right, had not been broken. So you have to, again, assume discounted price, buying opportunities. Let's go down to the 15-minute. 15-minute, still not really that clear. So we'll go down to the 1 minute now, okay? Plain and simple. If you did not follow my pre-plan analysis and you had no idea about the CYPRX delta zones or anything, given the fact that I told you guys to be buying at 1.26100, or that I was going to be buying at 1.26100. I didn't tell you guys to buy, but I told you guys that I would be, and I gave you my analysis, right? How could you have gauged this price action? So step number one, let's finish this Zoom call off. Step number one, understanding central bank policy divergence. Hawkish Bank of England, right? We saw in the El Chapo analysis section, I told you guys why the Bank of England remained hawkish this week. Let's just recap that, right? We saw, give me a second, let's find it. Right? We saw UK lending and services data both come out higher, suggesting less pressure. You guys see that vocab on the Bank of England to cut rates. So what does that mean? Bank of England taking rate cuts off the table. This created intraday demand for the Great British Pound, right? Meanwhile, vice versa, we still have a dovish Federal Reserve market betting that they're going to cut interest rates. So step number one, remember, we're going to go over confluences right now. Write this stuff down. These are the steps you should be taking. Notice how we're not starting off with technical analysis. We're starting off with a firm understanding of the directional bias of the market given the central bank perspective, the people that are in control of these markets. Remember, we're not here as technical analysts to sit here and say that that's what's going to confirm our trading bias or our trading direction for that given day. Technicals are like 20 to 30% of your trading. Everything else via your psychology and your understanding about order flow in the market is what's going to drive your success. So step number one, understanding the direction that the central banks are trading. Central banks, Bank of England hawkish, Federal Reserve dovish. That means most likely strength in the Great British Pound temporarily and weakness in the dollar, even given the fact that these temporary fundamental data releases have given strength intraday back to the dollar. The overall higher time frame macro perspective is Fed rate cuts. Okay, understanding what that does to the market gives you an advantage. So that's step number one. Step number two, confirming higher time frame. 8 hour, 4 hour, and hourly, I showed you guys, have all been bullish. So that's step number two. So now that's two confluences that you have to say to yourself, every single time risk assets drop significantly in price, offering discounted opportunities on the higher time frame, I'm going to be a buyer. Why? Because 8 hour, 4 hour, and 1 hour structure on risk asset classes across the board have not been broken. So if you're selling risk assets and you're in profit, you need to understand that intraday scalping, and you need to take profit or move your stops to break even to protect your capital. Because if not, this is going to happen to you, right? You're going to be selling because you think that the market's going to reverse because you're impulsive and you chase 1 minute impulsivity candlesticks, and you're going to get annihilated because you're going to be greedy. You're going to be like, oh my gosh, I'm catching the top of a move. I'm going to make freaking millions of dollars, but you're wrong. The market's always going to eat you and humble you, right? So step number three, out of the way. Okay. Step number four, understanding where previous banking institutions, if you don't have the delta zones, bought from. Going back to the 15-minute time frame, we can confirm that 2 New York sessions during this week bought price above the 1.26100 and sought that was a area of interest or a key significant psychological level that respected their balance sheet, or whatever the heck they order from, right? Driving demand back for this currency pair, which is the Great British Pound, right? Now we can jump down to the 1 minute time frame. Once price comes down into our higher time frame area of interest, which was where previous banking institutions bought from during previous New York sessions on the higher time frame, we can scale down and we can look for fractal bullish order flow. And we got that to the T. So let's go over that and we'll end this Zoom call here. Okay. 1.26100, we had a significant bounce up. Let's just call it a 10 pip push away from that. Okay, remember I told you, we had a 40 pip push away from that, but remember I told you guys you need to see at least a 10 pip push away from a key significant psychological level. Following that, what needs to happen? I'm going to ask you the question. You don't need to say it out loud. Just answer that in your head. Logically speaking, what needs to happen next? If this market is not going to sell off, what needs to happen next? The market needs to create a higher low instead of a lower high, lower low formation. So here you can see that happen for the first time. Massive sell-off, manipulative move, pullback for those order block traders that think that the market's going to do something like this. Again, this is why I told you guys the only safe sells would be if we break below the 1.26100 manipulation range. We didn't get that. Instead, the market formed a higher low, higher high formation. This is now bullish order flow. The market did not create a lower low, lower high. It instead, on the lower time frame, created a high, higher low, higher high. This right here is the definition of bullish order flow. Go look it up. Higher highs, higher lows. Simple. So, given the fact that, remember, we just started from top down, macro environment, divergence between central banks, bullish 8-hour, 4-hour, 1-hour. Okay. Any given time that discounted prices have happened on risk assets, what have the banks been doing? Buying up those discounted prices on risk assets, right? 15-minute. I showed you guys previous New York sessions had been buying during New York at this key significant psychological level. Price now has dropped down into this higher time frame area. You can scale down to the 1 minute, and now you're looking for bullish order flow on the 1 minute. Okay. Once that happens, if you did not enter at the 1.26100, again, don't chase the market. You're now looking for a sound risk to reward ratio. In order to do that, you need to see another break in structure. So here we got that. Along with the delta zones, you can see the market pulled back one more time to confirm buyers are in control. They did what? They did not create a new low in the market. They instead created a higher low that led to a higher high. This is now, as a CYPRX trader, your confirms to say, okay, we have new structure in the form of higher high, higher low, higher high formation. I can now take my Fibonacci using my understanding of the deltas, seeing that we had bullish order flow, push through the delta. You can take your fib from the low to the high, and you can give yourself a sound risk to reward ratio. Now, I want to talk about this, okay? A high risk trade would be you entering here with a tight stop loss beneath this low, targeting, I'd say, previous areas of interest where bank and institutions were selling previous sessions, or targeting areas of interest where New York session was selling previous sessions. Why? Because you understand orders exist above these highs. So leveraged traders still had open positions here, here, and here, and you can see the market start targeting those areas. So those would be your target areas, right? But now let's talk about the stop loss, because I've told you guys, if you're going to enter a higher risk trade, given that the higher time frame bought from down here and you're entering here, what you need to understand is that your safe stop loss, this would be a tight stop loss, higher risk trade. Your safe stop loss would need to be beneath the higher low that was created after the manipulation move. So yes, it's going to extend your stop loss a little bit. It might throw off your RR just a little bit. Instead of it being a 1 to 4 or a 1 to 5 or a 1 to 7, it might be a 1 to 3 or a 1 to 2, which is okay, right? Safe stop loss would have been beneath the higher low that came in after the manipulation move here. So here's the manipulation move, given the delta zone manipulation area that Usman had put in the chat, right? Higher low that comes in after. That's where I try to tell you guys that I like to put my safe stops. You can even go to the 10 and 15 minute to confirm that. And then you're going to be targeting, again, those areas of interest where bank and institutions sold from previous sessions, right? If the banks are not going to target lows, which you can clearly see they did not, by failing to make a new low, where are they going to be targeting? Highs, right? So very simplistic trade breakdown, macro, all the way down to technicals, psychology, okay? I saw so many people today say, I'm going to be selling because dollar's strong. I'm telling you, you got to check your psychology. Take a step back. Take a step back and understand why you're selling. Why were you manipulated into selling today? Because of bearish candlesticks? We don't do that here. We don't chase candlesticks here. We chase information. And the information stated from multiple angles, from central bank policy divergence to technicals to fundamentals that have been coming out since October of last year, that this was going to happen. Strength in risk assets continuously happening time and time again if they come into discounted prices. Why? Because the market is expecting a low interest rate environment in 2024. So they're trying to get ahead of the curve. They're being greedy. The market's being greedy right now. If you're fighting against greed in the market, when these market makers are greedy, you're going to lose, right? Their greed outweighs your greed. And if your greed is against their greed, you're going to get annihilated. So understanding this in advance, I'm telling you guys, this is one of the most accurate communities on the face of the internet right now, and you guys are involved in it. So just ask yourself, how bad do you want it? Remember, I told you guys in previous CYPRX tracking video breakdowns, you're coming up in this market against me. You're coming up in this market against Usman. You're coming up in this market against other traders that want it much more than you do if you don't want it bad enough. Not only that, but you're also trading up against the smartest algorithms in the world. So if you're not maturing, if you're not taking long hours at the beginning of your trading career to study this stuff, then you're going to fade out. You're going to continuously lose. And then those losses are going to pile up and pile up and pile up, and they're going to crush your confidence, and you're going to end up quitting. Don't do that to yourself. Take a step back. Understand that this is a long, drawn-out process. It takes time. It takes determination. It takes commitment. It takes knowledge accumulation and then proper knowledge implementation. And over time, you can do this.
Alrighty, so I hope everybody enjoyed that video breakdown. Hopefully you took some valuable notes, and hopefully I left you guys with some information and some knowledge that you can take and utilize in your own personal trading career. If you did and you enjoyed that video breakdown, smash that thumbs up button and subscribe. Don't forget, if you want access to our private community, all of our fundamental breakdowns, technical analysis, delta zones across multiple different asset classes in crypto and in forex, don't forget to visit CYPRXtrading.com. You guys can always reach out to the customer support email down in the description of these video breakdowns to schedule a private one-on-one Zoom call with me. I can actually physically show you everything that you will have access to, talk to you about the different options that we offer. If you are interested in joining our private CYPRX community, I'd love to have a conversation with you. With that being said, enjoy your weekend. Have an amazing, amazing day, and I will see you all in the next video breakdown.